Next is about acquisition cost of trucks. This part, you will understand more about acquisition cost of trucks. So Wu Incorporation operates a retail computer store to improve its delivery service to customers. The company purchased 4 new trucks on April 1st, 2017. The terms of acquisition for each truck were as follows. First, truck number 1 had a list price of 27,000 and was acquired for a cash payment of 23,900. Okay. Firstly, you have to you should remember that we should use the acquisition cost, which is 23,900. 23,900 is the acquisition cost, or the invoice cost, or the invoice price, we can say. 27,000 is the fair value of the truck, so we don't use that. We use 23,900 in the recording or in the journal entries. So this is how you record 23,900 on debit and 2,000 and cash 23,900 on the credit side. Okay, this is easy. Next one. Truck number 2 had a list price of 28,000 and was acquired for a down payment of 2,000 cash and a non-interest bearing note with a face amount of $26,000. The note is due April 1st, 2018. Wu would normally have to pay interest at a rate of 10% for such a borrowing, and the dealership has an incremental borrowing rate of 8%. So, from this transaction, what you should have to remember first, what you need to record first is the 2,000. Okay, so the truck price is 28,000, but you pay the down payment first, 2,000 for cash, and the rest you pay by the note payable. So write 2,000 on the credit side, cash 2,000 on the credit side. And then how much is the truck that you have to record? You have to consider the note payable. Okay, the note payable, you cannot just simply write note payable 26,000 on the debit side, because this one is a non-interest bearing note. Non-interest bearing note is the note that they don't state the note. They don't mention the interest on the note. So that's why this 26,000 will be changed. Okay, and the interest rate is 10%. So when you look at the table of the this one here, when you look at the table of the present value, you have to look at the present value factor of how many years? Only 1 year, April 1, 2017 until April 1, 2018. So you have to see the present value factor of n, present value factor of 1 for 10% and 1 year, which is 0.9090. Okay, so this number, the 23,636, we can get it from 24,000. Sorry, 26,000 multiply with 26,000 multiply with 0.9090. Okay, let me check. 26,000 multiply with 0.909. Okay, yes. That's why the notes payable on credit 23,636, and then truck 25,636. Okay, next number 3. Truck 3 had a list price of 25,000. It was acquired in exchange for a computer system that Wu carries in inventory. The computer system costs 16,500 and is normally sold by Wu for 21,000. Wu use a perpetual inventory system. So, so here you have a computer system, okay, and the cost is 16,500. But if you sell the computer system, the price is 21,000, okay. But this computer, you don't sell it, you exchange with a truck with a list price of 25,000. So meaning that you will record the computer system on the credit side, and then cost of goods sold on the debit side. So you will record like this, okay, cost of goods sold and inventory here. So and then sales and revenue here. It seems like you sell your truck, but you don't receive cash, you receive truck, okay. So if you sell the computer system with the normal way, let's say you sell the computer system, you will record like this, right? Cash, and then sales revenue, and then cost of goods sold and inventory here. But in this case, you don't receive cash. Instead of cash, you receive truck. So you record here truck. Okay. Okay, that's all for this one. And then number 4, truck 4 had a list price of 26,000. It was acquired in exchange for 1,000 common shares of Wu Incorporation. The common shares trade in an active market value at $23 per share. Okay. The truck had a list price of 26,000, and the company wants to buy the truck with a list price of 26,000, but not using money. They use the common shares. So in this case, it's also same like we use cash, right? If you use cash, in this case for number 4, you will record truck 4 on debit side and cash on the credit side for 23,000, right? $23 multiplied by 1,000, 23,000. So in this case also, it's the same thing, like you use cash for the payment. So you will record truck 4, 23,000, and then common share 23,000. Okay, you don't record 26,000 here because we already agree that we have to record at the acquisition cost or the invoice price or the invoice cost. Okay, in the sheet number 4, we will see like this kind of question, but they don't mention the market value of the shares. So how if they don't let you know the market value of the price? Okay, that's all for this